Where is the best opportunity for today? I'm going to start talking about stocks that have news. We're going to start there, guys. So we have SOPA this morning that does have a press release. Okay, so Society Pass, that's SOPA, is acquiring Guerrilla Networks. The only thing is there are no terms disclosed. But we've seen SOPA in the past go on some nice little moves, right? We've seen the stock go from 5 to 22, right? We've seen the stock gap up to 4 and rip to 6. We've seen the stock go from 260 up to 455. So we know that when the stock does move, it can move. It's not like we see a lot of gap ups and a lot of upper shadows and red days. We typically gap up. We have some decent pops, gap up, decent pops, open up, decent pushes. We do leave some upper shadows on SOPA, which leads me to believe that we could open on up, see a nice little spike today, and then possibly give it all back or give most of it back by the end of the day, because we can see on these nice green days with volume, right? We do have those large upper shadows and we do give a lot back. We have these large upper shadows, we give a lot back, okay? We do have these upper shadows and we give a lot back on high volume days. Well, today we have some volume on SOPA, right? So right now at this point in time, SOPA is up from 209 to 235. Now let's see if we can go find SOPA on our gap list. Right here, we have a 15 million in float stock. So it's a nice low float stock. We know it can move. We have a catalyst. It's currently up 12%. And we have some decent volume, all right? Decent at this point in time. So the average volume on this stock is 2.9 million shares. We're only trading 2.45. We have 30 minutes until the market opens. We'll probably be above that average volume. And then we can definitely see a lot of volume move in today. So I definitely want to keep SOPA on watch to see if the stock can go on a nice little move to the upside, all right? So right now, we do have some resistance up towards around 245. And what we can do at this point in time is put a decent little trend line here on the stock. So what kind of formation are we starting to see here on SOPA? Right? What kind of formation are we possibly starting to see develop here on SOPA? Well, we have a nice big rip to 245. We pull back and put in this low. Nice big rip to 245. We're pulling back and putting in this higher low. So we can see that we have a low, a higher low, and a higher low with a trend line as support. And we see here that we have flat resistance. This would be a possible ascending triangle breakout formation that could start pushing the stock up towards around $2.60. So right now we have VWAP support, trend line support. I'm not saying buy it, but I'm saying build a plan here because this could be a good little trade. You could put your stop losses right here at 230. You have a target up here at high a day at 245, just in case it doesn't break on out. But again, if you do get in here, your stops are nice and tight. You have some room until your first target. If we do break 245, we have potential up towards around 260. If we ever start to break 260, we can see the stock up into the 290s here on SOPA. So we do have the start of a potential ascending triangle breakout. We have a verified trend line that's being validated and the VWAP that's being validated here as well. The only thing is we just don't have impressive volume, but overall, there is some nice consistency. We do have these higher lows, flat resistance. I do believe we could see this break 245 up to 260 and then 294. And if we start to crack the 90 EMA here, we crack the VWAP, and if we crack this trend line, you could put a stop loss at 230, and that's the best place for that stop loss on SOPA. So I definitely want to be watching SOPA now in pre-markets out of the gate at 9:30 as well. We do have AMLX moving on up. So AMLX receiving notification, date extension for the treatment of ALS. So again, their extension was approved by the FDA. So shares are trading higher after the company announced that the FDA has extended the review timeline of the new drug application for AMX 0035. All right, so right now we do have AMLX currently gapping up about 40%, trading 2 million shares on average 700. So we have high relative volume. We have a nice lower float stock as well, 29 million in float. We know the stock could rip and run. We do have resistance at $14.30. So right here around $14.30 is a level of resistance. So if we do start breaking that level, where do we think it can go next? I would say $15 psychological resistance. If we can start really breaking that $15 area, we could see 16. If we start breaking $16, we could see the stock all the way up towards around $18.99. All right, team? Support right now, the best support when we look at the daily chart is $10. However, we do have this prior level of resistance in pre-market, 1232 resistance, 1232 resistance, 1232 resistance, 1232 resistance. So old resistance, possibly new support, right around $12.32. Okay, so if we do pull back and we see 1232 hold, that could be a great place to start a position for that leg up to 1430, 15, $16, and our final target today would be $18.99. Now, if we do start to crack below that 1232, we can see this all the way back down at $10. But it is meeting the criteria to be a watch list worthy stock. So we should be watching AMLX. All right, team? Here are my top 2 stocks for the day, right? I will be watching SOPA and AMLX out of the gate. There is some great potential, but we do have some prior day movers that are setting up pretty decently. And I think we could see some nice action today with EFOI. Number 1, EFOI is setting up for a mid-candle breakout here on the daily chart. So we've already gotten above that 123. Typically, we want to see a gap down and then to start break this daily candle from yesterday, but we're actually already gapping up above that 123. So 123 was yesterday's high. 123 was the close here on Wednesday. So where do you guys think the best of the best support's going to be? Back down at Wednesday's close, and then back down at yesterday's high of day. So $1.23 is support. If we see it crack that level, I'm not too crazy about it. We could see it all the way back down at $1. But if we can hold 123 here, we do have potential to Wednesday spiking high up towards around 163. And if we ever see the stock breaking 163, we could see 187 and then $2 coming off of this mid-candle breakout that's starting to get some early action here in pre-market. So I absolutely want to be watching EFOI above that 123, at least up to 163 today. Second stock that I really like, okay, and I started the position here, very small, because anything could happen. So it's so small that I could literally take a couple of dollars a heat, and if we still look decent, I could always add to my position. SIGA, we have 2 things that really stand out to me. Number 1, we see this ascending triangle from Wednesday. So we have this uptrend from Wednesday pre-market. It connects yesterday. It connects again here in pre-market. So as long as this trend line holds and we have flat resistance here right at 1341, this could still be setting up for an ascending triangle breakout. Now, if we do start to crack this trend line, that's not looking all that great for an ascending triangle breakout. But technically speaking, ascending triangles consist of higher lows with flat resistance. So even if we crack the trend line, we could still be in play, because where is the prior low here? Well, the last low is right here. So if we do something like this, crack that trend line, but we still technically hold a higher low, that's technically still an ascending triangle breakout because we have higher lows. So I really want to see it hold the trend line, because that really makes this a good setup and a good strategy and a good opportunity right out of the gate. But if we do crack the trend line, I'm not scared. The only time that I'm starting to get worried that this is not going to play out is if we start cracking below this low here, right around $12. So my entry is $13.15 at this point in time. I can let it come all the way down to $12. We start cracking 12, I start getting out, but I only took like 20% of my desired position. So I would like to have 500 shares, give or take, on this play. I know we can see $1 to $2 to the upside, okay? And it's something I'll probably hold throughout the majority of the day. Right now, I only have 125 shares on the table, right? So I can still add another 3 times to get to that 500 share position. So I took about 20 to 25% of my desired position here in pre-market on SIGA, because I'm starting to see that push on up here, looking for that possible break over 1341 resistance, right? So I do like SIGA for that reason, number 1. Number 2, go ahead and open this up. Go ahead and run a downtrend from that high at 1750, connect it to these highs, and then run it all the way across. What do we have here? Well, we have a nice downtrend that we just broke as well. So we can see here that not only do we have this short-term uptrend forming an ascending triangle breakout, we also have this very nice downtrend that we're looking to really break as well. We broke it. We're pulling back for a possible retest. I'm still watching this uptrend as support, and as long as we continue to hold these higher lows, I do believe we could see a nice little break over 1341 and see a nice little push up to 15 and then back up towards around $17 on SIGA. Possibly if we start breaking that $14.80, $15 level, we could definitely start to see this rip on up to those highs right around $17.50. That's another reason I like it. And what's the final reason I like SIGA? The last 2 Fridays, I've told you, watch the stock for a short squeeze. Stocks do tend to squeeze on Fridays. Traders don't want to short a stock over the weekend. Anything could happen. Some brokers may not even let you swing a short over the weekend, depending on your margin and your account. Some brokers want you to be out of a short position Friday. So that's why sometimes we see short squeezes on Friday. I've talked about this the last 2 Fridays, right? What happened last Friday? We saw a squeeze. What happened the Friday before? We saw a squeeze, right? What happened the Friday before that? We saw a squeeze, right? Friday, we see a squeeze. So what could we see today on this Friday? We could possibly see a short squeeze once again on this Friday. So there's so many reasons I like this stock. I like the fact that we're breaking the downtrend. I like this short-term ascending triangle. And I like the idea of a possible Friday short squeeze here on SIGA. As why I'm building a small position at this time, looking to see if the stock does indeed get some great action and possibly breaking that $14.80, $15 to $17.50. I am going to be watching SIGA. So those are my top 2 for me. I like EFOI for the mid-candle breakout. I like SIGA. We do have some great potential here today on AMLX, and we do have some great potential today here on SOPA. And like I just told you, you could be making an entry on SOPA, put your stops right at 230. You have a 245 target and a 260 target. So I just gave you a quality alert for free on YouTube. I just gave you a quality alert. What made that a quality alert? Well, I educated you guys on what the setup was. I built a plan with you as well. Said if you're buying here, your stops are going here. You're taking profit here. You're taking profit here. So now all you have to do is go ahead and assess your position size. I can't do that for you. I don't know your account. I don't know what your risk tolerance is. But this is what we call a quality alert. I'm not just saying buy it right here. I'm saying, hey, this is a good trade, and here's why. I'm backing up this alert with education. So now if you took this trade, you just made money. Next time you see something like this, you know how to trade it. You don't need to rely on me to actually be able to make money in the market. So this is what we do every single day inside of chat. So if you took this trade on YouTube, if you took this trade here inside of chat, congratulations. That was a really nice, low risk, great reward trade, meeting the criteria beautifully. And we had so many reasons for this stock to get a nice little pop. It was holding the VWAP. It was holding the 9 EMA. It was holding the trend line. This was the higher low for the break out of this ascending triangle. So again, congratulations if you guys were able to get in to SOPA. All right, team. So we have SOPA definitely on high watch. AMLX, I am watching AMLX today. I am going to be watching EFOI. I am going to be watching SIGA as well. Now, there's a couple other stocks that I may peek at throughout the day. Maybe VERU. I may be peeking at that stock throughout the day. Maybe RDBX and maybe BKSY. But if we start to see these 3 stocks move, then I'll bring them to your attention. Okay, right now, we just want to focus on SIGA, EFOI, AMLX, and SOPA, right? Here's what we got going on with the SPY and the Qs. Okay, here's what we got going on with the SPY and the Qs. And before we actually dive into the technicals on the SPY and the Qs, let's talk about what we have going on for the month of June. Okay, so we know that we have another FOMC meeting that's going to conclude on the 15th of June. Okay, we need to see what the Fed's plans are moving forward. What are they going to do with interest rate hikes? Are they going to increase, decrease, keep it the same? The market's going to digest that and price that in. If everything's neutral and it's already been priced in, we won't see a reaction. If the Fed is going to be less aggressive because we see inflation coming down, actually coming down, not stagnant, not sticky, not holding, but actually coming down. And the Fed can be less aggressive. Well, the market's going to like that. The market's going to price that in a positive way. Now, if the Fed comes out and goes, you guys, inflation's still sticky and it's actually kind of peaking back up again. Well, the market's going to start pricing that in. The market's not going to like that. The market's going to react in a negative way. So it really depends. We got a lot of stuff happening this month, guys, right? We have the FOMC meeting June 14th to the 15th. We have CPI data here on June 10th. We have PPI data here on June 14th. We also have quantitative tightening by the Fed to reduce their balance sheet. That was supposed to start here on June 1st, right? At this point in time, based on a report that I saw here last night, that they're currently almost $2 billion behind on reducing their balance sheet. So right now, this is a big thing as well. So not just the FOMC meeting, not just CPI and PPI, right? Not just Russia, Ukraine, not just, China maybe with Taiwan or China locking down the whole country. There's so many other things going on that we know they are coming on up. We don't know if China's going to invade Taiwan, but if they do, boom, we're screwed. The market's going to react. We don't know if China's going to continue to lock down, right? If so, the market's going to react. What if there's a resolution with Ukraine and Russia? Well, the market's going to react. Those are variables that we just don't know. But what we do know is we have an FOMC meeting this month. We know that's going to make the market move. There's going to be volatility. We know we have CPI data coming out on the 10th of June. We know we have PPI data coming out on the 14th. We know that the Fed is now starting to reduce their balance sheet. So why does this really matter, right? Why does this matter? Again, I am educating myself more and more every single day on monetary policy, the Fed, the economy, what moves the markets, right? I'm a day trader at heart, but I'm actually becoming more of a skilled investor at this point in time. And so one of my goals over the past couple of months is to educate myself more and more and more on how to become a more skilled, longer term investor. And these are like macro, right? You have micro and you have macro events, economic events, macro, micro. We've heard those terms. I'm still educating myself there. But again, we need to be able to zoom out and see the big picture and what's going on. And so right now, this month was the month that the Fed is going to start reducing their balance sheet. So what does that mean? It removes liquidity. If they're going to start selling treasury bills, mortgage-backed securities, and they're trying to reduce that balance sheet, that's going to remove liquidity from the market. And based on some research I did last night, if I'm not mistaken, again, I'm still educating myself here, little by little. I'm putting that work in the attempt to learn this, right? Because I'm just a penny stock trader at heart. It'll affect, wow. One sec, guys. That was weird. All right. It will affect the credit market first, and then the equities markets would react. So the credit markets, right, is your bond market. So bonds. Okay, so bonds, and you got bond traders. I guess they're classified to be some of the smartest people out there, right? That's the bond market. That's going to be like your treasury bills, if I'm not mistaken. So if we see, right, the bond market react very negatively, and then I was also seeing that the spreads increase. Basically, it's all going to start with the credit market, because what we're doing is we're removing liquidity because the balance sheet is being reduced by the Fed, and they're trying to reduce it by $2.1 billion. Right? They're really trying to reduce this, removing liquidity from the credit market, which could react here within the equities market. So as we start to see this quantitative tightening, reduction of the balance sheet, we need to be paying attention to the credit market. And depending on what happens there, we will see a reaction here in the equities market, right? So from what I've read up on, credit market goes first. That's the bond market. Then the equities market. We're looking at, T-bills. They're saying they're selling treasury bills. They're selling mortgage-backed securities. I mean, there's a lot of things that the Fed are actively doing right now. And then we have CPI, PPI, inflation, Russia, Ukraine, supply chain. There's a lot of things that the Fed are doing right now. Have you ever heard that term on CNBC, a soft landing? Right, a soft landing, because they have to navigate this plane on the smallest airstrip possible, and they just got to land perfectly in order to not keep the economy too hot and not to potentially put the economy into a recession. They got to just be super perfect with everything. So they have a hard job right now. And if they nail this, we may not go into a recession. If they nail this, right, they're bringing the economy and slowing the economy down just enough, right, to not throw us in a recession. That should help us find this potential bottom here in the summer months, like we've been talking about the last couple of weeks, where I'm going to start buying some of my long-term positions. All right. So that's what we have going on for the month of June. There's a lot of things happening, team, okay, which are going to impact where the markets are heading next. I still think the markets are going to come down lower. In just my honest opinion, I still think the markets are to come down lower. Do I think they could hit that 50 SMA, maybe back up into the 430s first? I do believe so. But I ultimately think that we will see that 407 crack on the SPY, back down below 400, and start to retest some of those lows in the 380s in these summer months. And then that's where I think when we have more data at that point in time, we'll see if the markets are going to stabilize. We'll have a better understanding if this is the market bottom. And if we can fully be confident in that, I am going to be buying my long-term portfolio. I'm going to be adding a lot of great names. Okay, I was adding a little bit a couple of weeks ago, cherry picking, very little. I will become more aggressive here in the summer months, as I do believe if everything goes as planned, right? Again, something brand new could happen tomorrow, but if everything goes in as planned, based on what we've discussed, I think that could help us, stabilize, find a bottom. I think this could be a great buying opportunity. And if you go back historically and look at any time the S&P 500's been down a certain percentage, it's always rebounded. The market always comes back, right? We know that the market always comes back. Could it go down 50%? Sure, it could. Could it go down 55% like it did in 08? Sure, it could, right? Could it go down 30, 40% like it did in COVID? It could, absolutely. But what do we know about the stock market? It always comes back. It always bounces back and pushes in the new all-time highs. So as the markets are down 25, 30%, Amazon's down 40, 45%, why am I not buying some of these quality companies, knowing that the market will always bounce back? Okay, so those are my plans for this month leading into the summer months. Okay, but for a day trade, for day trade intraday opportunity, this is how we lock in some profits to be able to have additional cash flow to buy some of these names for our long-term portfolios. And that's everything that I've been doing this year. All right, so the SPY, we need to pay attention to 412. We need to pay attention to 412 here on the SPY. 412.21. Why 412.21? Resistance on Friday, a lot of support. We ripped off that level. We bounced here on Tuesday. We bounced Wednesday pre-market. Cracked below it, retested as resistance. Yesterday pre-market, test as resistance, break above. 412 is a key level. What else is right around 412? This massive multi-week uptrend. So if we crack the trend line and we crack 412, let's say hello to 407. And that's a very strong level, guys. We bounced here several times. Last Thursday, resistance. Friday, pre-market resistance. Nice big break. Wednesday, support. Yesterday, support multiple times. We would not fall below 407, and we rallied off that 407. If we start cracking 412 in the trend line, watch for this to come down to 407. If we ever see 407 break and it's cracking, I will be looking to short the SPY back down to 400, back down into the 390s, back down into the 380s. That would be a swing trade short. So what would I do here? I'll probably go ahead today as we're trading. I'll go ahead and submit an options approval to Fidelity so I can actually trade options on my Fidelity account. I would actually be looking to swing trade some puts on the SPY and the Qs. Yes, I know, right? Shocking. Josh is going to trade an option? Yes. I would also be willing to swing trade SQQQ long, right? So that's if the Qs start cracking, the Qs. I would be willing to trade SQQQ long, and I would be willing to swing trade SQQQ. I would not be willing to swing trade UVXY, right? I don't know if I'd be willing to really be aggressive on a UVXY swing trade. So with the SPY, I'm going to attempt to get that options approval today, and I would be looking to take maybe 60-day put contracts, as I do believe the SPY can come back down to the 380s. All right, so I'm really paying attention to these levels today. We start cracking that 412, I will be looking to trade UVXY intraday to the long side, expecting the SPY to crack. And if we start to see the SPY crack 412, that's when I'm going to say, hey guys, one sec, I'm submitting my options approval. Because if we ever see that 407 crack today, I will be starting a position on those longer term swing trade puts here on the S&P, right? The Qs, very similar stuff, just different prices. But as far as the TA, it's very similar, just different prices. Multi-week uptrend, okay? But the Qs have that better level of support back down at 304.65, right? That was our bounce level here on Tuesday, Wednesday again, Thursday, and we rallied off that level. If we come down and start cracking this trend line, we could see the Qs pull back into the 304s. If we ever see the Qs cracking the 304s, we can see it down towards around 300 and then 295. We start cracking this trend line. I'm looking for a day trade down into the 304s. If we ever start really dropping below those 304s, that's when I start looking to build a position on SQQQ to the long side. Okay, so we have day trade opportunity, we have swing trade opportunity. Now, that's my short plan. What if the Qs come down to the trend line and bounce? Well, I'm not looking to short this. I'm looking to go long back up to 315. What if the SPY doesn't crack 312 in the trend line, right? We can still see the markets move higher. I'll be looking to take this back up to 417, 418. So I have a long plan in place. I have a short plan in place. And right now, team, right now I'm in 50-50. I am 50-50 because we're gapping down this morning, right? If we were flat, I would be 80-20 to play this long because we had a very nice green day yesterday. If we were actually flat right now, relatively holding these levels, these gains, I would be more 80% confident we're playing this long to 424. But the simple fact that we're gapping down, I'm really unsure on what direction the markets are going to go. So we're watching that 412, we're watching that trend line, and really what happens at the trend line and that 412 is how we're going to play the markets today. Same thing with the Qs. Depending on what happens around this trend line is how we're going to play the markets today. All right, 80 to 90% of my focus today, team, because we're at a key level, is going to be the SPY and the Qs. I really don't care about NVIDIA today. Today trade, I really don't care, to be honest with you. I have it on my watch list because it looks decent, but a lot of my focus is on the SPY and the Qs. So if the SPY and the Qs start ripping, it's going to pull NVIDIA up. If the SPY and the Qs start cracking and dumping, it's going to pull NVIDIA down. I'd rather just look at the SPY and the Qs. I do like Airbnb here. I do like Airbnb. It's on a back burner right now at this point in time. All right, it's a back burner at this point in time, depending on the overall market, what it does. We could have a very nice opportunity on Airbnb. So if I ever see Airbnb setting up and I'm looking to get involved, I will go ahead and bring it to your attention and get you guys prepared. But I do not want to overwhelm you right now. I do see Lucid as well. Now, Lucid, I will talk to you about Lucid because I like what I'm seeing here on LCID. What do we have here on LCID, guys? What kind of chart formation is this? We literally just talked about this one yesterday inside a chat during our lesson. I'm watching Tesla too. Tesla was the next one I was going to discuss, right? So Tesla, they're cutting 10% of jobs. They're doing freezing, hiring freezes. So obviously Tesla's dropping on off, which is pulling the markets down. But what do we have here on Lucid on a 1 hour time frame that's clear as day as to why I want to watch this for a day trade as well as a swing trade? What do you guys see there on LCID on a 1 hour time frame? So this would be an ascending wedge, 100%. So we have a rising wedge. We have an ascending wedge. These are bearish reversal formations. These are intended to crack out of these wedges and reverse in trend and dump to the downside. We've been in a decent little uptrend for about a month now. Not quite a month, but just about a month. These are intended to crack out of these wedges and start reversing and start dropping. It's very clear as day here on Lucid. And I really like what I see here. This could be a phenomenal day trade opportunity and a phenomenal swing trade opportunity if we do indeed crack out of this wedge. It may happen today. That's why I'm talking to you guys about it. It could start cracking here today. But if it doesn't crack today, we could see it grind back up to the top end of this trend line and then maybe around the 7th. So maybe around like next Monday or Tuesday is when you see it right in the tip of the wedge, and then we possibly see that crack on down. So Lucid should be on high watch, on high watch. All right, guys? So definitely keep this one on watch here. If we really start to see that explosive move, right? Remember, explosive. We want volume to really explode on down. You can start a position. If it ever regains the trend line, you're getting out. Very nice tight stops. Now, if you don't like getting in right at the crack, you want to wait for the crack, the retest, then get short, you can play it that way as well, okay? So you do have Lucid. And I will be watching Tesla here right around yesterday's low of day. Okay, so Tesla at yesterday's low of day is a key area for me to be watching. If we cannot bounce off yesterday's low of day, where could we see Tesla dump on off to? Okay, we could see Tesla dump on off 718. We can see Tesla dump on off to 712. And then we could see Tesla dump on off to $700. So I am watching Tesla today. If we do see a nice bounce here, right off yesterday's lows, we could see a nice little pop out of the gate. But again, team, it really depends on what we see here with the SPY. It really depends on what we see here with the Qs. But we do have some fantastic opportunity with Tesla today. We may have some fantastic opportunity with Lucid today. And we could have some fantastic opportunity with Airbnb. So again, we are all set, ready to rock and ready to roll, team. We have about 29 seconds until that market opens. If you guys have any questions, now's your chance. Now's your opportunity. Once again, small caps out of the gate. We will be watching SOPA, AMLX, EFOI, and SIGA. Let's make it happen. Let's have an amazing finish to the week. And let's absolutely crush it. Markets open. We are live. Let's make it happen, traders. Is the POC, the point of control, a significant support resistance line? Yes, it is. The point of control, the POC on the volume profile, is indeed a significant level of support and resistance. And you cannot be going wrong just trading SOPA off that trend line. You cannot go wrong with just jumping in on SOPA off that trend line. I mean, nice big bounce off that trend line. So you want to use it in conjunction with other levels of support resistance, right? So we never ever use one indicator solely by itself. Okay? And it really depends as well, what visible range are you using? Are you using a fixed range for your volume profile? Or are you using a visible range for your volume profile? Right? Depending on the range that you've selected is going to dictate the volume profile and where the POC is. So that's one of those things that, number one, we're not going to use it all by itself. Number two, how is your volume profile actually set up? Right? Where, what's the range? What is it being calculated on? Just to throw that out there. So the reason why I don't use the volume profile on TOS is because it sucks. It sucks. So I stopped using the volume profile because I honestly don't really need it. I really don't need it. Yeah, it's not good on TOS. Now, it's good on TradingView. It's very good. If you do the visible range volume profile, it's fantastic. But again, as you adjust the visible range, it's going to adjust your volume profile levels. But we always want to use that in conjunction with other forms of TA, support, resistance, all that good stuff. So for now, today, I'm simply watching that 412 level, 412.21. And I'm really watching it now because what happened? We're squeezing off that level. 412.21 to the penny. Is that a coincidence? No, it's a very key level. 412.21 is that key level, as well as that trend line here. As well as that trend line.